we're joined by Rohit Srivastava from IndiaCharts.com. Rohit, we are breaching past every single level. Today, 21,300 taken on the Nifty. Sensex has crossed 71,000. What next? Near term, maybe in the next few trading sessions, and even a little more medium-term chart. Is there any pullback on the anvil?
No, there will be. There will be. You just need patience because the markets are overheated for a while and getting more overheated by the day based on various data points. The positioning, for example, at the start of November, we give a lot of attention to that, and one of the reasons we were bullish at 18,800 was that the FIIs were extremely short. Now that's no more the case. They're long by more than 50,000 contracts. And as these longs keep adding up, we are reaching the top end of the band in terms of extreme positioning. Along with that, we're also seeing huge futures premium in the last couple of days. That is the difference between the Nifty futures and the Nifty spot. And that shows a very large price that people are going to be paying for rolling over positions from here to January. What that shows us sentimentally is also people getting excessively bullish. So we are heading into the seasonal period, which is, Jan, Feb. Typically, markets do tend to pause, after the year end as the new year starts over there. And we're not going to have any more triggers here because, the Fed is done. They're not most likely not going to be doing anything till March. The budget is not going to hold anything because it's going to be a vote on account. So really, we're going to run out of triggers here at some point of time, and you will get that pullback. It's just that you're going to need a little patience. We are going into the year-end December, which is a holidaying period. Will that be the cause of some reaction? And will that reaction still not be everything till January? Because like I said, that is the seasonal point. So we are watching on the upside, the potential. I mean, the upside levels can be up to around 21,500 on the Nifty. So that leaves around 200 points to the upside. And on the downside, we probably look at something like the 20-day moving average that can, work as a support at some point, which is closer to 20,500, which is where we capped up after the election. So that is a major support. So that is sort of the near-term risk reward. In the Bank Nifty, it's a little more tighter because Bank Nifty is actually not taken out the trend line of its last two major tops, which is at close to around 48,000, and that is acting as a resistance even today. So I do sense that banking may not have too much upside here. And there possibly we may see weakness first, which is what we are already seeing today. So 48,000 is the upside, then the 20-day for the Bank Nifty is closer to around 45,500.
Okay, but Rohit, what is the kind of potential downside that you see in the Nifty Bank?
Yeah, so I mentioned that, the 20-day average around 45,500,
Okay.
600 is where we may initially look for support.
Okay, got that. I also want to ask you on this IT pack because, it's suddenly just taken off. Rima was just mentioning those levels as well earlier. I mean, this week itself, it's a 6% kind of move. But even with that, it's still far from what the other indices have done, right? Around 13% in terms of a catch-up which is left. Do you think even as the market corrects, this pack will stay a little bit more resilient, just considering the fact that it has not run up as much?
So I think it will remain extremely dependent on what happens, with the US markets. Right now, the entire move has been driven only by narrative that the Fed may consider, lowering rates that can boost, activity and therefore maybe demand revives. But we don't know all that yet. It's not that they have actually done anything. They've just spoken about it. They might wait a little longer. And so the reaction of the tech sector, I think, is sentimental at this point of time. It will eventually move with the rest of the market and with how US technology stocks continue to do.
What about Reliance Industries? How do you expect that giant to perform in the coming few days or weeks?
Every time the market picks up and I actually try to anticipate that, something big is going to happen on the upside, the expectation has been that finally Reliance will start participating in this move. But however, every time Reliance has belied that expectation. Once again, we are seeing that it has gone up to the 61% retracement mark. So if you take it from the top of July to the bottom that we saw in October, 61% is close to around 2,800, just around above this current level. No, 2,500, sorry. And so I don't know whether it'll get past that or not. That needs to be watched. It stopped there last week, sold off. Now it's rallied back just to that level. And if it can't really go past that, then again, it will be another failure to really break out. So Reliance has been tricky. I do hope it joins in. That will really add to the momentum and allow us to really start giving much higher levels for the market itself, because it's a major contributor. But so far that hasn't happened, and there's no clear sign that it will happen. And don't take that as a recommendation. We don't really provide any advice.
Rohit, considering that you're saying that this market looks overheated, maybe it's run a little bit ahead of itself on just this kind of positive news that's coming through globally. Is there anything where you feel that the uptrend is intact, that, maybe the move doesn't make you nervous right now?
So I think my nervousness is more short-term. I did have some longer-term concerns, but if I go by the recent policy and the recent, movement of the dollar, if I try to extrapolate that, then it will probably ease some of the medium to longer-term concerns. But I would really want to wait out a bit before, completely taking a stance till January. Like I said, it's a seasonal period. Every time we've seen markets peak out, correct through Jan, Feb. That allows us to sit back and think, because, we've actually seen some very good rallies in, say, PSU stocks. We've seen, something like that even in power recently. And in fact, we started seeing participation in the realty sector. Those are all very, very good signs. In fact, even the recovery of metal and IT, and we would want to think that, they are back on track, and, this bull market becomes even more broad-based. But right now, like I said, it's better to probably just sit back, because near-term sentiment and, a lot of the moves in the market over the last year have been driven by sentiment, whether it was, January, December of last year, where we had peak positioning, just like we are getting to right now. We had the opposite of that in March. Then again, we reached another extreme bullish sentiment in, July and later in September. And then the opposite of that in October. So sentiment has been the trade. The question is, can we go beyond that? If we can do away with the macro risks around the world, then we can actually start, quickly anticipating that, we should be even in the metal sector, and we should be in various other parts of the market, which are now starting to participate, because then the upside in some of these sectors can be pretty significant. So we will keep an eye at, buying into these sectors on the next dip. I just want to wait out for this dip to play out, between now and January before doing that.
Rohit, thank you very much for joining in. Look forward to chatting with you at least once more before the year comes to an end. Great speaking with you. We'll get into a break. We'll come back and talk commodities. Manisha Gupta joins in on the other side. Stay tuned.